Get your sense of where and how you should be positioned, therefore, right now and through the end of the year, given all this uncertainty.
Well, first off, I've got to say that Bill was very kind and it was very flattering, and I'm not quite sure I deserve it, but
he says it's there if you want it.
Well, that's true. So look, let's not make too much of this. Just refer to me as Your Majesty, and there's no.
And we're all good.
That's right. This is really a difficult time to be in the bond business because this unexpected pivot was pretty dramatic. Obviously, you were punished last year if you were long credit, if you were long duration. Now, this year, you're punished if you're underweight credit and underweight duration. And that's what you find when you're getting to inflection points in the market, is that you get these sudden moves that are knee-jerk. I think the challenge for someone like me is, do you try to become tactical and make a lot of short-term trades, or do you just say, look, we have a long-term view. Yes, we're going to have periods of outperformance and underperformance. Just stick with it. And then you're at the end of the day, if you will eventually be right. And that's in line with the work that Danny Kahneman did when he won the Nobel Prize in economics. It shows that investors, as a rule, just trade too much. They pivot. They pivot, just like the central bank. And so nobody can get the timing of all this stuff correct. And he basically believes, with the basic theory is, pick your portfolio based on what you think will happen in the next 5 years, put it away, and don't pay any attention to it unless something dramatic is changing that's changing your long-term view. And our long-term view is, at the end of the day, we're running out of capacity in the economy. We're going to start seeing inflation. And then one thing I want to digress is, I loved Chairman Powell's comment about unit labor cost. And I think it came up because of the Bloomberg reporter asking the question. Yeah, and it was, well, if unit labor costs rise, they doesn't necessarily have to increase inflation, but of course it would put pressure on corporate earnings through their margins. That doesn't sound, neither of those scenarios sounds good for risk assets. So
doesn't FedEx know it?
Yeah, exactly. So I think inevitably, we're late in a cycle, and a recession looms out there somewhere, and we can all argue about when, but it's coming, and people ought to, you've had a really good move since 2009. It's not a bad time to take some profits.